Okay, so let's cut straight to it. You want to get a handle on the latest turn in the U.S.-China trade relationship.
Yeah.
Specifically, that recent truce everyone's talking about. It's complex, right?
Oh, absolutely.
Headlines flying, different angles everywhere you look.
It really is. Trying to piece together what's happening, what it really means, and who gained what, it can feel like navigating a maze.
That's exactly why we're here. For this deep dive, we've gathered up your sources, the articles, the analyses, the background reports, all focused on this recent U.S.-China trade development. Our mission is basically to sift through that stack, pull out the absolute most important insights, and just hand them to you.
Right.
We want to give you a clear, informed picture of this whole evolving situation without getting lost in all the noise.
We'll walk you through the history, the specifics of the agreement itself, and probably most importantly, unpack what the sources are saying about the actual impacts and implications.
For both the U.S. and China.
Exactly. Using only the material you've shared, of course.
Okay. Let's dive in then. And, to understand the present, we really have to glance back at how we even got here. The sources take us back to around, July 2018?
That's right, yeah. That's when the U.S.-China trade conflict really started heating up.
And the background there, the sources point to these long-standing U.S. complaints about China's trade practices.
Things we've heard about for years. Allegations of intellectual property theft, for instance.
Right, and requirements for U.S. companies to hand over technology just to do business in China that forced technology transfer issue.
And significant state subsidies, giving Chinese firms a leg up in the market.
And all that led to the tariff fireworks. Both sides started slapping duties on imports.
Yeah, it escalated quickly. One source, looking back to August 2020, highlighted just how big it got.
What were the numbers again?
U.S. tariffs on up to $550 billion of Chinese goods.
Wow.
And China responding with tariffs on up to $185 billion of U.S. goods. So huge numbers.
Massive amounts of trade affected. It wasn't all escalation, though, was it? There was that phase one deal.
Correct. January 2020. That was a previous attempt to sort of dial things back a bit.
What did that involve?
It had some tariff rollbacks. Commitments from China to buy more U.S. agricultural goods, things like that, and agreements on areas like IP and currency.
But clearly not a full resolution.
No, more like a pause. It didn't fix everything.
Which brings us to May 2025. Now we're seeing reports of these new trade talks. Geneva, Switzerland.
That's right. And the outcome described in one analysis was, quote, a greater than expected de-escalation.
Greater than expected. That is intriguing phrasing, isn't it?
It is. And the core of what they agreed to is this point-for-point mutual reduction in tariff rates.
Okay.
But critically, this is initially just planned for a 90-day period.
Ah, okay. So temporary, a 90-day reduction. What do the actual numbers look like now, post-agreement?
The sources are pretty specific here. The U.S. rate on Chinese imports dropped by, get this, 115 percentage points.
115, that's huge.
Yeah, bring it down to 30%.
Okay, 30%. And China's rate?
The rate on U.S. goods dropped to 10%.
10%.
And what really stands out is comparing this to the levels right before the agreement. One source called them crushing triple-digit levels.
Which were?
145% for the U.S. tariff rate and 125% for China's.
Wow. Okay, dropping from 145% to 30% is a massive change. But, 30% still sounds pretty high compared to before the whole trade war started.
It is, absolutely. It's a relief, but maybe not full normalization. And it wasn't just about the tariffs either.
Oh, what else?
Well, China also agreed to pull back on some non-tariff measures, things they'd put in place as retaliation.
Like what?
Removing export controls on certain critical rare earth-related mineral items. It's a big one.
Rare earths. Yeah, we'll definitely need to circle back to that. Anything else?
They also apparently suspended some anti-monopoly and anti-dumping investigations into certain U.S. companies.
Okay, so clearing away some other barriers, too. And I saw something about setting up a new channel for talking.
Exactly. A new mechanism for regular dialogue for ongoing bilateral negotiations on economic and trade stuff.
Which sounds positive, like wanting to keep the conversation going.
It does signal that.
Yeah.
But again, it's important, and the sources really note this, that this whole thing is framed as a temporary pause, or maybe a framework.
Right.
It still needs that formal sign-off from President Trump and President Xi to be, fully locked in.
Got it. So that's the nuts and bolts of the agreement. But the big question, the one you probably care most about, is what does this actually mean on the ground?
Yeah, the impacts.
Let's start with the U.S. side. What do the sources say about the costs, the reliefs, the implications for the United States?
Well, It's definitely a mixed bag, according to the material we looked at. One analysis puts forward a pretty pointed view,
Okay.
suggesting this truce actually comes at a, quote, cost to U.S. credibility.
Credibility? How so?
The argument laid out is that the U.S. administration may have, quote, lost their credibility a bit in these negotiations and potentially given China more leverage, especially, it seems, in how China is framing the deal. They're apparently referring to it as strategic decoupling.
Strategic decoupling. That sounds like China putting their own spin on it, framing reduced reliance as their choice.
That seems to be the interpretation in that source, yeah. Implying it's a deliberate strategic move by them, not just a negotiated outcome.
Okay. Cost to credibility, strategic decoupling. Those are definitely some heavy points raised.
Yeah.
What about financial markets? Any concerns mentioned there?
There are. The sources mention concerns about foreign investors. One suggests that they might have been, quote, burned by the precipitous decline of the dollar earlier on.
Right.
And because of that, they might be, quote, not as eager to park their capital in the United States going forward.
And the consequence of that could be?
Potentially higher volatility. The source specifically says it could bring higher volatility in U.S. bond and stock markets.
Makes sense. Less stable capital flow, more market jitters. Okay, what about businesses? And ultimately, us, the consumers. I remember reading something about supply chains getting hammered.
Yes, and this is where we see a more tangible potential upside mentioned in the sources. They explain how U.S. retailers and manufacturers were really reliant on those just-in-time inventory management systems.
Minimal stock, rely on quick deliveries.
Exactly. And those systems became, quote, severe liabilities during the trade war because tariffs just blew up those precise schedules.
Made it hard to adjust quickly.
Right. And one calculation in the sources suggested that the higher prices from the previous tariffs were really set to hit consumers hard this summer. And so these talks potentially, quote, saved summer vacation for many U.S. households by bringing those tariff costs down, at least temporarily.
Saved summer vacation. That's a very concrete image. So that lower 30% tariff is definitely a relief for some then.
For sure.
But is it enough for everyone? Is 30% low enough across the board?
Well, not according to the sources. While 30% is obviously a huge improvement from 145%, the material notes that many small U.S. companies might still find it, quote, too high.
Still squeezed.
Yeah. Could still lead to lost sales for them, make them, quote, uncompetitive in international markets. And there's also specific uncertainty mentioned around the future of tariffs on fentanyl imports. That wasn't fully clarified, apparently.
Okay. And kind of underlying all these specific impacts, there seems to be this recurring theme in the sources about unpredictability.
Oh, absolutely. The sources are quite clear on this. The U.S. approach, described as Trump's shifting tariff policies, has already, quote, roiled global markets, sparked congestion and confusion in major ports, and cost companies tens of billions of dollars.
So even with this truce...
Right. The unpredictable nature means, as they say, tariffs can be snapped back if talks do not go as planned. It signals, as one source really puts it, that the predictable global rulebook on trade has been thrown out.
Okay, so that paints a picture for the U.S., some immediate relief, especially for consumers maybe feeling it via supply chains, but also these pretty big concerns about credibility, market stability, maybe competitiveness for small businesses, and this constant background noise of unpredictability.
That sums it up well, based on the sources.
Let's flip the coin then. What do the sources tell us about the impacts on China, and maybe what leverage they perceive they gained from all this?
Well, one really fascinating insight the sources highlight is what China seems to have learned through this whole process.
Oh.
Apparently, they realized that the U.S. administration responds quite strongly to, quote, domestic pressure applied by American businesses.
Makes sense. Businesses complaining loudly gets attention.
Exactly. And they specifically identified, according to one source, that the Achilles heel of U.S. supply chains is indeed inventory logistics. That just-in-time vulnerability we talked about. And this realization, the source argues, will be factored into China's negotiation framework and economic statecraft calculations going forward.
That's really interesting. So they've potentially identified a key pressure point in the U.S. economic model itself. How might they use that knowledge in the future, even without resorting to tariffs?
Well, the sources suggest that China, quote, could use technical and administrative measures to delay shipments.
Ah, like red tape.
Exactly. Even without imposing formal tariffs or export controls. Think customs delays, extra inspections, bureaucratic hurdles, basically using the system itself as leverage.
That's a more subtle tactic, isn't it? But could be very disruptive.
Potentially, yes.
Okay, what about the broader economic outlook for China now following this truce?
Well, China set a 5% growth target for 2025. And interestingly, following this de-escalation, JP Morgan Research actually raised its full-year growth forecast for China.
They did. By how much?
Up to 4.8% from 4.1%. Now, that's assuming this temporary tariff reduction holds.
Okay.
Their calculation was that the drag on China's growth from tariffs is now significantly reduced from an estimated 3 percentage points down to just 1.5 percentage points.
That's a pretty substantial upward revision to their growth outlook. So what kind of policy moves are expected from China now based on this?
The sources mentioned that China had maybe planned some additional fiscal stimulus like issuing 1 trillion yuan in government bonds.
Right.
But that might be less likely now, given the improved tariff situation. However, they are still expected to continue with consumption support measures.
Like what?
Things like trade-in subsidies for consumers, pension increases, incentives for new births, basically trying to boost domestic spending.
Okay.
And monetary policy easing is also still anticipated. The PBOC, their central bank, is expected to continue with rate cuts, maybe 30 basis points, and also reductions in the RRR, the reserve requirement ratio.
Which frees up banks to lend more?
Exactly. Maybe 100 basis points cut there expected for 2025, all aimed at encouraging credit and stimulating the economy. And net exports are specifically noted as a, quote, big growth driver for China.
Right. So for China, a brighter economic forecast, potentially a new playbook for applying pressure subtly, and continued domestic policy support. Okay, let's zero in now on what seems like a really critical strategic piece of this puzzle: rare earths and semiconductors. This is where it gets really interesting based on the sources.
It absolutely does. So rare earth elements, the sources describe them as critical minerals essential for manufacturing key commercial and military products.
We're talking defense applications.
Big time. Things like jet engines, radar, avionics, and space technology. But also crucial components for commercial tech, like electric vehicles.
Okay. And China's position in this market is?
Dominant doesn't quite cover it. The sources state China accounts for 90%, 90%, of global supply and production capacity.
90%. Wow. That's incredible market power.
It really is. Concentrated in one place.
And the sources suggest they haven't been shy about using that leverage.
No, not at all. China's use of export controls on rare earths is explicitly called out as a strategic move and leverage, and it's caused significant, quote, anxiety in the U.S. defense industry precisely because of that near-total reliance.
Okay, so if the U.S. really needs these rare earths, what does China need from the U.S. side in return? What's the trade-off?
According to one analysis, the reported trade-off right at the heart of these recent talks was basically this. Quote, U.S. needs rare earth materials. China needs the U.S. technologies, especially the semis.
Semiconductors. Chips.
Exactly. And this is placed in the context of previous U.S. actions, specifically, quote, very restrictive sanctions on semiconductors.
Right.
One source notes those prior sanctions were under the Biden administration.
Right.
But these current negotiations under the Trump administration seem to involve this potential quid pro quo, which raises a huge question, doesn't it?
Yeah. Will the U.S. actually ease access to critical chip technology just to secure that rare earth supply?
That's the core uncertainty highlighted in the sources. The quote is, the final outcome of this negotiation is yet to be determined to see who was getting what and at what cost. It's high-stakes stuff.
It really is. Leveraging strategic resources against key technologies. And we even saw related reports mentioned in the sources, didn't we, about China issuing some rare earth licenses to U.S. auto suppliers.
Yes, and also reports of U.S. automakers apparently considering relocating production to China, partly because of rare earth curbs.
And even discussions about the U.S. maybe looking to get rare earth minerals from Ukraine, possibly in exchange for aid.
Right, all of which just underscores how central these materials have become in the global geopolitical game right now.
It really shows how tangled up resources, technology, and geopolitics are in these trade discussions. Okay, let's step back a bit. What are some of the broader implications here? Thinking about this truce and the way these trade dynamics seem to be unfolding according to the sources.
Well, first, we absolutely have to reiterate the temporary nature of this thing. It's a 90-day pause.
Expected to be extended, maybe?
Likely extended, the sources suggest, but deeper tariff cuts beyond this initial step are seen as unlikely. And that ability to, quote, snap back tariffs if things go wrong, that's still very much on the table.
Okay, and the global economic reaction seems kind of divided.
It does. Based on what we read, you have the World Bank, for instance, actually slashing its global growth forecast for 2025.
Lowering it. Why?
Down to 2.3% from 2.7%, and they specifically cited higher tariffs and heightened uncertainty globally as a significant headwind.
So they're seeing the overall situation as still negative for global growth.
Seems so. But then, conversely, you have J.P. Morgan research. After the truce, they actually reduced the probability they assigned to a U.S. or global recession, bringing it below 50%.
Interesting. So they're focusing more on the de-escalation aspect, perhaps.
Possibly. It shows different interpretations of the net global impact, doesn't it?
It does. And does this point to a bigger shift? Something changing in how global trade even works?
Yes, the sources definitely highlight a move towards more bilateral deals. Deals struck between two countries, effectively replacing what used to be seen as a more predictable global rulebook.
And the implication there is?
Well, one source notes that the very definition of an ally might become more transactional.
Transactional, meaning based on what you can offer right now?
Potentially, yeah. Based perhaps on concessions a country makes, or how well it aligns with the U.S. president's specific agenda at that moment. The use of tariffs in this way is even compared to a major historical event.
Which one?
The 1971 Nixon shock for currencies. The suggestion is that this current use of tariffs might be fundamentally reordering the international trading system, just like that event did for currencies.
Wow, that's a big comparison. And these new bilateral deals, they might not be as stable or long-lasting as the old agreements.
That's another point made explicitly. These deals may not have the same kind of durability. They might be more easily changed or abandoned.
Creating more volatility.
Exactly. Which requires, as one source puts it, agility and resilience from investors, from traders, from anyone trying to navigate this new landscape.
And there's also that interesting, maybe slightly less obvious point buried in the sources about U.S. passport power.
Yeah, about the reported impact on U.S. global mobility. U.S. apparently dropping in some passport power rankings.
And the connection made was
that this particular approach to foreign policy and trade was creating, quote, doubts in the confidence of the USA's passport power. Just another ripple effect, perhaps.
illustrating the wider consequences beyond just economics. Okay, so as we try to sort of synthesize all of this complex information from the sources, where does this leave us right now?
Well, the truce itself is certainly a step back from the immediate brink of even higher tariffs. It definitely buys time for more talks, more negotiation.
Oh, yeah.
But the sources are really clear. The big, significant structural issues and disagreements between the U.S. and China, they remain fundamentally unresolved. Nothing structural has really changed yet.
Right, and we've seen how differently this deal is being interpreted in the sources we looked at. Some see it as a positive step, a needed de-escalation. Others suggest, as we heard, lost U.S. leverage, maybe even a degree of, quote, humiliation in some of the commentary referenced.
Yeah.
And just to be clear, we've tried to present these different viewpoints exactly as they appeared in the source material you provided, without us taking any side.
Precisely. That's the goal. And the takeaway is that the path towards anything resembling a comprehensive long-term deal, it still looks highly uncertain.
And unpredictable.
Absolutely. And the sources constantly remind us the potential for some unexpected geopolitical event to just come out of nowhere and derail everything, cause a new escalation. That risk is always present.
It's a really complex, multi-layered situation, isn't it? So just to recap for you, we've taken your sources, dug into them, and used them to unpack this recent U.S.-China trade truce.
Yeah, looking at the specific tariff reductions, the non-tariff moves.
And those really critical strategic elements like the rare earths and the semiconductors, that whole dynamic.
And we explored the reported impacts, both the potential positives and the negatives, on both the U.S. and Chinese economies.
Right, and touch on those broader implications for the global trading system as a whole.
And understanding these dynamics, as you can probably tell, is absolutely crucial. Because as we've seen from the sources, these things ripple outwards. They impact global markets, major industries, specific company supply chains.
And potentially, yeah, even the cost of the goods you see on the shelves every day.
Definitely.
So to leave you with something to really think about, drawn directly from the source material, considering these reports, we discussed the potential shift towards more transactional global relationships, the critical strategic importance of resources like rare earths, and this idea that the predictable global rulebook might be fading. What does this emerging era, this era of less certain trade deals and intense strategic resource competition, actually imply for long-term global stability and maybe even for your own economic future?
It's a big question.
Something to keep asking, keep digging deeper on.